Happy Wednesday, here with your R5 Home Loans weekly update on the mortgage market. First off, I'd love to say happy Thanksgiving. Love all of you out there. I really appreciate your support. I'm especially thankful for my family this year, my wife, especially with, setting up this business and getting off the ground here in 2022 and giving me the love and support that I needed to take this risk and get this business off the ground. So without further ado, lots going on in Fed world, right? So obviously all eyes are on inflation when it comes to mortgage rates and really what is the Fed doing about it? So a lot of comments that came out over the last week. First, we had Boston Fed President Susan Collins expressing confidence that policymakers can tame inflation without doing too much damage to the economy. So that reads as she's definitely has a concern about balancing Fed rate hikes versus the overall damage to the economy, meaning it's not, burn the boats, go full bore, but that there is definitely a, component to, make sure that, we're looking for, what the overall impact to the economy is. San Francisco Fed President Mary Daly said that the next stage for the Fed will in many ways be more difficult, and that the Fed officials need to be mindful of their choices, and that adjusting too little could leave inflation unchecked, but adjusting too much too fast, she didn't say too fast, but she said too much could lead to unnecessarily painful downturn. Lastly, Fed President Loretta Mester said, that we're at a point where we're going to enter a restrictive stance of policy, and I think it makes sense that we can slow down the pace of increases, that we're still going to raise rates, but we're at a reasonable point to be deliberate in setting monetary policy. So lastly, the minutes from last month's Fed meeting came out this afternoon, which is part of why I wanted to make sure I got this update out before the holiday weekend, but not till later this afternoon. In those statements, there were some really interesting, specific comments, but the overall tone and tenor that I got out of it was that, that there is a strong majority that believe we need to continue to raise, but that they are not really going forward, in saying what they need to do past that. So I think we're at roughly an 80% likelihood of only a 50% rate hike in December, and I think like roughly a 70% likelihood of another 50 in February, and then, the chances of like a 25 in March. That being said, they haven't come out and said it, but it feels like there's a little bit of a pivot towards should we wait and see? So for right now, I expect they'll continue to raise, but those rate increases are already largely baked in to the market. So I think, the inflation data came out before the last Fed meeting, and the next inflationary data is going to come out right before the next Fed meeting. And I think that's going to be really important to see what's happening with inflation, what's happening with the overall economy, and at what point they might take a wait and see approach. Nobody's giving in across the board that they're there yet, but you can start to see some cracks, and hopefully that will continue pushing the rally that we've seen. And maybe we can see rates go down a little bit further, kind of, which was my initial view kind of 3-4 months ago, in terms of that we would be ending the year, in the fives. I don't know that we're going to get that far that fast, because I didn't expect it to take this long to get inflation under control. But I feel like you're starting to see that the Fed officials are saying maybe we should see what all of the impact is of all of these hikes that we've done. So more to come on this. Stay tuned. Have a happy Thanksgiving. Hug your loved ones, friends, family, whoever it may be. Have a wonderful long weekend, and we'll be here if you need us here at R5 Home Loans. Thanks, and follow us for more.